The aims of this conference. I've done some research on financial inclusion, which you'll see, but I thought I'd try to relate that to the specific issues raised in this conference. Just briefly who we are. I'm the director of the Runnymede Trust. We're a think tank. We were founded in 1968, so we'll be 50 years old next year. And we do our work through both engaging in quality research and analysis, but also engaging with communities. So those are mainly migrant and black and minority ethnic communities in Britain. But we are also a member of the European Network Against Racism, which is based in Brussels. So we've done some work at the European Commission level. And I've spoken in Estonia before, in fact, on issues to do with race and racism about 4 years ago. And we also seek to influence policy, as you hear from that. We seek to influence UK government, but also the European policy. Obviously, with Britain leaving the European Union, we'll have have to reevaluate how we engage with Europe. But we feel that the issues that we face in the UK are similar to those issues that we face everywhere in Europe. And even with us leaving the European Union, I think hopefully we can still learn from each other. So I just thought I'd briefly start by saying financial inclusion is a sort of term, and it's probably maybe unfamiliar. So I'd sort of specify 5 domains, what I've called domains of financial inclusion. So these are areas in which we might try to pursue financial inclusion. This is banking. Do people have bank accounts? Are those bank accounts fully transactional? Can they use those bank accounts for standing orders? Can to transfer funds directly? I don't know what kind of bank systems you have in Estonia or other countries where you're from, but in the UK we have different kinds of bank accounts, and not all of them have all of the features that you need. For example, we have something called a basic bank account that only that the government deposits credits, welfare benefits into, but that participants cannot have an overdraft, users cannot have an overdraft, and that product also does not allow them to make transfers, electronic transfers. Then there's savings. I'm going to speak quite a lot about savings. In fact, that's the one I'm going to focus on in the main of this presentation. And savings are both short and long term. So you might have short-term savings when you have a rainy day unexpected need. Say, for example, your child's clothes have got too small, or your washing machine is broken, and you need short-term savings to pay for those things. But it's not just about short-term, and as I'm going to describe later in the presentation, I think the focus on long-term savings, whether those are pensions or assets, is actually a very interesting way to think about financial inclusion and integration. Another aspect or domain of financial inclusion is insurance. Do people have access to insuring the contents of their house when, for example, it's stolen, or from flooding or other natural disasters? And of course, in some countries, there's private health insurance. More typical is employment or life insurance. When you get injured at the workplace, do you have life or employment insurance? A fourth issue is credit. So that includes loans, personal loans for things like credit cards, which most of us have and use credit in that way, but it's also business loans and mortgages, of course. Most people do not have enough money to buy their homes with cash and require credit to do so. And finally, there's advice, which is a bit different from the others. The others are more around products, things that you can buy or what we call financial products. But advice is also, I think, a key part of financial inclusion. What kind of information, what kind of advice do people get in terms of how they should use their money, how they should, in fact, buy these different kinds of products, and which ones are appropriate for them. So just to put that, so those are the domains, keep that in mind, and here's the context for migrants in Europe, which I think is relevant for thinking about how they're currently positioned in terms of things like banking, credit, savings, advice, and insurance, but also where we might think about financial inclusion as a solution to some of these challenges. So we know across Europe that migrants generally have lower employment rates and lower income, and much of that is down to discrimination. So we have evidence in the UK, for example, that you have to send in twice as many CVs, even with the same qualifications, when you have a foreign-sounding surname. And the academic who's doing that work is also doing it in France and in one Eastern European country. I forget which one. That will be published at the end of this year. But it's not just about discrimination. There are also other barriers, such as foreign qualifications, language, which we heard talked about earlier, and social networks. If you're a migrant, you didn't get your qualification in the country of where you're living now, and typically there's a challenge in terms of existing labor markets and employers recognizing those qualifications. You may speak the language, but you may speak it with an accent, and employers may either think that you don't speak well enough, or you may not speak well enough to do certain kinds of jobs, so that may limit the kinds of jobs that you can get. And then, of course, social networks. If you were born overseas and did your schooling and university overseas, you're unlikely to know people who are, for example, working in all of the different spheres of the labor market. We also know that migrants are more likely to be self-employed. And I think self-employment is an interesting area to think about in the context of financial inclusion, because to grow a business, to start a business, you typically need access to credit. And if you're a first-generation migrant, you may not have that much savings, because you may have spent your savings in trying of getting to the country where you're now living. And you may also be thinking about saving for your children, so you may not have a lot of savings left over. Further, one of the things that self-employment and indeed business loans show is the need for past history. So when banks and other financial institutions decide to loan to people, they typically look at past experience. And if you're a new migrant and you have very little interaction with a financial institution, that will mean that you have very little past experience, and that will mean that your risk score is higher. So even if you get a loan, you may be having to pay a higher premium for it. So that's sort of one of the reasons why things like self-employment, although it doesn't look like a financial inclusion issue, or it might seem like financial is just a technical question, I think if we can think about financial inclusion in these ways, it can improve labor market outcomes and integration then for ethnic minorities. So in sort of conclusion, that there's a sort of higher financial exclusion in all of those domains because of the nature of migrants in Europe. So higher exclusion from bank accounts, higher exclusion from mainstream credit, higher exclusion from savings, insurance, and indeed advice, financial advice. So I'm going to now come on to the next slide to explain a little bit more what is financial exclusion. But what the point I want to try to get across here is this reflects exclusion both from public goods. So migrants typically have less access even to things like welfare benefits, but also private institutions. So it constrains migrants' rights in terms of accessing public goods and their choices in terms of the kinds of products that they can buy in financial institutions. And I think that reflects two ways of thinking about financial inclusion. The first way is a more kind of rights-based approach, I suppose, or even a social welfare approach that's more popular, I think, in Europe, especially in continental Europe, which is that financial inclusion is with ensuring all citizens are provided with the means to participate in social economic institutions. So you don't necessarily see them merely as products that people can choose to buy. There's a second way of thinking about financial exclusion or inclusion that's more market-based, right? Which is ensuring that everyone has the opportunities to take up and choose appropriate, affordable financial products. So this is more about buying services and products in the marketplace. And of course, things like credit are not usually thought of as a public good. But something like banking might be, right? So as I said, these are sort of social welfare versus an individual choice model of what we think financial inclusion is. And depending which model you find more compelling, that will affect your view on what we should do in the space of financial inclusion. But not just generally, so it's not just generally do you think we should focus on ensuring that financial inclusion is more seen as a right to participate in economic inclusion, or rather as having free choice to make decisions about products in financial institutions. You might think it's different in different domains, as I've just suggested. So banking versus insurance versus credit. I think banking is, or maybe should be, viewed usually as a more basic service. And my understanding is in Estonia, this is the way in which it's tended to be seen. Or as a utility even, like water, like electricity, right? Without a bank account, you can't get a job, you can't access welfare benefits. So it's not really a financial product that people should be able to choose not to have. It's not like buying a Ferrari or a Volkswagen. You need a bank account. It's not a consumer choice. Now, there are different ways to deliver banking as a utility, even if you think of it as a utility. So as I said, in the UK, we had a very high unbanked population in the 2000s, 3 million people out of 60 million. So that's quite a lot of people who were unbanked. They had no bank accounts at all. And the policy development was this basic bank account, which was a very bare bones, minimal bank account. And in France, by contrast, they have a right to a bank account, and in Belgium as well. So if you go, every bank has to give people who go to a financial institution a bank account. And of course, there's technology. So I understand that in Estonia you have a sort of e-passport of some sort of description. I'll let you in the audience talk to me about that afterwards. But my understanding, technology does offer opportunities to think about, I think, bank accounts in particular in new ways. But I think it's important not to overstate how far those solutions always deliver for migrants. So as I said, in the UK we have basic bank accounts, and in France you have a right to bank accounts. The reality is migrants are still more likely to be unbanked for various reasons. So first, they may not have citizenship. So the right may only apply to citizens. So obviously if you're not a citizen, then you don't get to exercise the right to a bank account. Documentation. Banks may not accept certain kinds of documentation. We have this is a major problem in the UK, where passports are the only thing that are accepted. And if you're an asylum seeker and maybe you don't have a passport, then you may technically have a right to a bank account, but you can't prove the documentation as to who you are, so you can't get a bank account. Yeah, so I've just sort of explained those things. So even as well with the sort of solutions, whether it's technology or a right, I think we have to think carefully about whether or not those policies actually deliver for migrants. So that's banking. So I think banking, of the five types of financial inclusion, 5 domains, is the most obvious utility or rights-based one. I'm not going to talk much about advice, credit, and insurance. I'm going to focus on savings, but I wanted to say something briefly in case you wanted to discuss it later. I think there's at least 2 questions on advice. So one question is, how do we deliver better advice, knowledge about money? How do we spend money? How do you count money? How do you spend your money weekly? In schools, to children, but also to adults, to ensure that they're budgeting properly in terms of their weekly income and expenditure. And I think there is a role for the state. There is a role, though, also arguably for civil society and for financial institutions. The second, though, challenge is that most financial institutions are, of course, in competition and offer different products. And the state cannot say that this product, mortgage product, is better than this product. It can regulate to ensure that all of the products meet a basic minimum and support, therefore, appropriate advice. So I think we have to think through carefully the role of the state and allow for, of course, a marketplace of differential products to develop. One of the things that I've come across, for example, is a Chinese community in Manchester where they're all going to one advisor because they don't speak English. And that advisor has a particular kind of advice about how they should, for example, invest in HSBC, the bank. And it's not necessarily wrong, but because that person doesn't have, because the Chinese migrants who are going to that advisor don't have other choices, they're not getting a range of advice about how they may want to invest their money. So I think there is a role for the state, for civil society, and for financial institutions to be better and on delivering financial advice. I think insurance is another one that, again, will vary by country. Obviously, like health insurance is a sort of not a product that we need in most European countries because we have state-run, state-supported universal provision. We've solved the difficulty of insurance by collectivizing risk. And I think one of the things that's interesting is, nevertheless, there are, of course, going to be other forms of insurance that will be provided in the market. And one of the points that I think is important to understand about insurance is the prior point I made around risk scoring. If you don't have a past history, if you've recently moved to a country, you may be having to pay higher, at least initially, for your insurance. So people may choose not to even have insurance. We've had even an issue in the UK with car insurance, where people aren't buying it. This is technically illegal. So this is an example, I think, where passing a law that says it's illegal to drive without car insurance doesn't mean people aren't driving out on the roads without car insurance. I'm sure you have issues like that here as well. And I think the challenge is, which sorts of goods and products should we collectively pool to spread out that risk? What sorts of products should we see as products? And then also, I think a final question that I think isn't asked enough is, what sorts of characteristics can we legitimately use in determining a credit score? So recently the European courts decided that gender is not allowed to be used in determining the cost of, for example, car insurance, because it was seen to be discriminatory. So men and women you're not supposed to use gender anymore in determining car insurance. This is even though men in their 20s are by far the most dangerous drivers who get into the most accidents because of the risk appetite that they have on the roads and the kind of speed that they drive. So it's interesting whether or not we think people should pay more for a product because they're a migrant or because they're a woman or because they're an ethnic minority, even if we know that some of those characteristics do indeed have higher risk. So this also comes into credit, right? There's something called microfinance. I don't know how many of you are familiar with this. There are microfinance institutions in Europe. I've spoken at the European Microfinance Network conference in Amsterdam and in Georgia. And microfinance is a way of providing credit at a sort of small level for often small loans and small startups for business. And it comes from actually development in the developing world, right? Where you have microfinance loans in India or in Nigeria, where financial institutions are less developed on the ground, especially in rural areas, and where there's a lot of unbanked people and a lack of mainstream credit that flows. I think in the West, it's kind of interesting to think about microfinance, right? Because in the Western countries, microfinance is not usually for entrepreneurial activity, it's for consumption. So people don't have enough money to buy a washing machine and get a loan. That's very different from getting a loan to buy a sheep, to say, knit some sweaters that you can then sell in the market, which you can justify paying high interest rates for because the person who's bought the sheep is generating income through the credit. But if the credit is being provided to smooth income of low-income groups who are not going to be making money off of that credit, should we be charging people 50 or 100% APR interest rates to do so? So some feel that savings or grants are better for low-income individuals, including migrants. So I'm now going to come on to my kind of take on what we should focus on. I'm happy to talk about any of this. This is supposed to be a workshop, so we're going to have a half-hour discussion, but I thought I'd give you mapping of some of the different issues that financial inclusion raises. But I wanted to focus on savings and assets for a particular reason. So, as I said, I'm happy to discuss any of those domains, including that good practice example, if you think the Estonian case study is a good practice example of how banking can deliver on inclusion for migrants and integration. So why am I focusing on assets? Well, this is data, I know you may not be able to see it very well, from the Wealth and Assets Survey that we run in the UK. And what it shows is the low level of savings and assets of ethnic minority groups. And these are not all migrants. Some of these are now obviously British born. So about half of this population, about 55% of this population, about a third of that population, and a third of that population are actually born in the UK. So they're not all migrants. But what it shows is that black and minority ethnic people, that's the term we use in Britain, generally have less assets. And this will be true also for migrants. So 60% of Asian and black people have no savings at all, which is twice the rate for white people. And not only that, do they have no savings, they have a less diverse range of products. So where they have savings products, they might only have one such product. Why? Why do groups have lower savings? Well, first of all, low income. It's hard to save when your income is basically being used on consumption of daily needs, on food, on clothing, on housing costs. Very little left over to save once you've spent the money the littler money that you earn. Second, of course, is generational inheritance. If you're a migrant, you obviously haven't inherited anything from a parent or grandparent, even if it's a few thousand euro here or there, from an aunt who passed away a few years ago, or from a parent. And so BME people, migrants, are less likely to have access to start a business as well, right? Not just to smooth consumption. And as I said, although this is for the UK, this is likely the same across Europe. This is more general evidence from the UK, but again, I think it will be similar across Europe, which is that assets are far more unevenly distributed than income. You know, we talk about unequal income distribution, and you'll probably have seen Thomas Piketty's book on this, but unequal assets are much more unequally distributed. In the UK, anywhere of 10 to 20% of the population have no assets at all, which means obviously if they have any rainy day problems, that they have nothing to tap into. The wealthiest 1% owned approximately a fifth, 20% of the UK's wealth, and half the population, so the bottom half, has only 7% of the wealth. And 2/3 of British households have less than 3,000 in non-housing savings and assets. I say non-housing, so housing is an asset, but you can't just sell your home and get the money tomorrow. So housing, I think one of the challenges in Britain is that so many people choose to develop housing as an asset. Now that's fine and good, there's nothing wrong with developing housing as an asset, but you obviously can't tap into the money that asset is worth. You have to, the only way to do that is to sell your home. And if you sell your home, you still have to live somewhere. So obviously, selling your home, developing only housing policy as asset building, I think is a mistake for policymakers. And I think that's been a huge mistake in the UK, that there's been way too much focus on housing policy. I won't talk about that, but pensions is the other really important area, which is the largest non-housing asset. In the UK, again, we have a smaller state pension, and so individuals have to choose to buy pensions. And recently we've developed auto-enrollment for low-income workers to allow them to opt out rather than opt in to a pensions policy to try to improve that. So, but I specifically then wanted to link all of that discussion with integration. So why am I talking about assets? Why am I thinking about integration? Well, as I said, I think it will allow for greater and better participation in the economy. So the evidence is that economic integration is the most important domain of integration, more so than cultural. So ensuring that people have equal participation in the labor market. Assets can improve people's outcomes in the labor market via business and social mobility. So people can start their own businesses, grow those businesses, be entrepreneurial, which can be a way to improve their labor market integration, but also for their children. If people have assets, they can invest in their children, and then we can increase social mobility, so we'll see further integration down the line. So assets are really important in terms of economic integration, but I think there's also a kind of psychological benefit, which I've called forward-looking. I've quoted Michael Sherrod in here, who's kind of a sort of global expert on what's called asset building measures. While income feeds people's stomachs, assets change just their minds. So if you're just focusing on the short term, how much money do I have on the table to get food in my stomach, you're thinking about tomorrow. You're not thinking about the future. If you start saying to parents of children born in Estonia, but who maybe were born elsewhere, well, what about future savings for those children? Immediately, people are starting to think 20 years ahead, 10 years ahead. And so when people are thinking about savings, they're sort of thinking about future consumption, but they're also thinking about their future in Estonia. They're thinking about, in 10 years, I'm going to have a savings product that's going to be a lot larger. And that doesn't just have kind of mental effects. The argument that Sherrod makes is it has behavioral effects. It changes the way people act in the world by becoming more long-term in their thinking. And I think, as I say, becoming more long-term and thinking about staying in this country, because you're thinking about how is that asset going to grow here? How is my child, who was just born, for example, going to have enough money when they're older? Immediately, you're starting to think about longer-term integration. I think the final point is around citizenship, too. People then hold a sort of stake in their society if they have a bit of income invested in that society, right? If they have savings in Estonia, they kind of they're in some ways a part of Estonian society. And I'll explain something more about that on the next few slides. I think equal participation does require people to have some minimal level of assets, giving their importance in social mobility. And it encourages people to have a share. We sort of have a share in our society. And I think if the government supports these sorts of asset building measures, it doesn't just demand of migrants be integrated, feel included. It shows them, we are investing in you by providing you with the savings, by supporting your ability to save. And therefore migrants will indeed feel like they're being integrated into citizenship. So I thought I'd use some examples, because this is all a bit maybe abstract of what has been tried. So the first is the Child Trust Fund. So this was a scheme in the UK that we developed whereby every child born in the country was given £500. And the parents were then able to invest it as they wanted. And as I say, even migrants, their children were given this benefit. So parents were then immediately thinking, well, what am I going to do? This trust fund, by the way, only matured at age 18. So you couldn't touch the money until the child was 18 years old. It was developed not actually as an integration measure. It was developed as a social mobility and citizenship measure, but I think it's something that we should consider. And when Romani Prodi was the president of the commission, he talked about it as a bambino bond, sort of a baby bond, that every European citizen, to try to encourage European integration, is given 500 euros at birth as a European baby bond, And this would encourage also, I mean, this was one of Prody's ideas taken from the Child Trust Fund. Another idea is what's called matched savings or savings gateway. So both of these policies, unfortunately, have been scrapped in the UK because of austerity, but they were both thought about and developed in the first case. So matched savings are quite common in the developing world. So rather than putting savings in and getting interest, for every pound you save, the government matches it with a pound. Or a foundation, as it is in Africa and in Asia. So rather than putting your money in a bank account that gets, say, 2% interest or 4% interest, for every pound that you save, up to a maximum of, say, 50 pounds a month, the government matches it pound for pound or 50 pence per pound. So 50 cents for every euro, say. So the idea is that this is encouraging even small amounts of savings can change people's mindset and encourage them to save further. And you can means test this so that people have to be on very low incomes to qualify for match savings. I do think there are some interesting thoughts around housing. So even if we don't want to encourage home ownership as such, there are kind of cooperative models of ownership, shared ownership. I think more important than that, though, is taxation. I think we tax assets very lightly. So this is more about how you would fund the other schemes. It would be around taxing. And one of the things that this highlights is that, it sounds quite, I suppose, radical to talk about building up assets for poor people through public policy. But the reality is we have tons of policies for the rich in terms of incentivizing their savings. So in the UK, for example, rich people are allowed to save up to £15,000 a year with no tax. There are tons of, in the US, you're allowed to deduct the mortgage you pay on your home fully from your tax. So these are all incentives for rich people to save and build up assets. But we have no equivalent incentives for poor people. If we think rich people need incentives and we think it's fair for the state to provide incentives to rich people to save, why not do the same for lower income groups and indeed for migrants? And then finally pensions. I do think pensions are important. Pension systems vary so much that I don't want to get into the detail. But I think pensions are another example of where you can't access it until you're 65. So again, it encourages longer term thinking and how far the state is explicitly making that connection and ensuring that migrants who often come a little bit late to the state pension system get sufficient top up, I think is an important question. So the point I'm trying to make is that there's a variety of things that you could try, but I accept that the policies will be different. However, their aims and the possibilities in terms of integration, I think, are similar. I'm almost done. One more slide that will be what we discussed. So I think the other question this arises, and it's going to be my later presentation I'm speaking on civil society, is, who delivers these, right? So, and I think part of it depends on whether you see it as a rights-based approach or whether you think it's about products. So obviously we're going to be talking about the state in some cases, but we're also obviously going to be talking about private institutions and civil society. Especially on banking, I think it's most best suited to a public utility model, right? We think of banking as a universal service. But the provider is unlikely to be a civil society or even the state, because you need a banking license in Europe to operate bank accounts. And I think there is a danger in having civil society organizations operate bank accounts, especially given their volatility. But I think there's still questions, even if we have established how we want to deliver, how do we ensure that migrants can actually exercise their rights of access? So that might be a role for civil society. So for example, to support migrants to work with banks to demonstrate their documents, right? To sort of have civil society organizations encourage migrants to get the right documentation, to interact with banks, and to ensure that they have bank accounts. I think advice, again, is one that can be regulated. It must be regulated by the state, and basic financial education arguably should be provided in schools. But beyond that, there's a further role, possibly, as I suggested, for civil society on financial management, helping people learn how to manage their money. But I think this may also need regulation. We don't want civil society organizations giving bad advice to people about how to spend their money. But on the other hand, migrant-based organizations might be better placed to deliver that advice than, say, someone working in a bank because of the trust and because of the interaction. I think for credit, it's pretty clear that that's going to have to generally be provided by private institutions, although there is some role for, say, microfinance institutions, which are sort of social enterprises sometimes, so less sort of not just financial institutions like banks. And maybe the government also, in terms of not thinking about it in terms of credit instead of loans, grants. So should governments have grant schemes for low-income individuals to cover sort of unexpected costs like a broken washing machine, so that they can ensure that families can wash clothes for their children. I think for insurance, we've decided to go for a collectivized model in healthcare in Europe. But as I said earlier, all forms of private insurance create risk pools. So some are seen as more and some are seen as less risky. On savings, I've talked about a lot, but I think it may appear that state provision is best. But again, we have to think about banking licenses. And so there's an interaction between what the state policy is and ensuring that private institutions actually deliver on them. So in the UK, for example, with the Child Trust Fund, the way it worked was there were about 20 banks nominated, and they were all encouraged to develop different funds so that there was choice in the market. But if a parent didn't make a choice, it rotated around. So every 20th child went to each of the 20 providers. So it maintained the sort of government policy that every child should get an asset, but also allowed for private competition in the provision of those products. Those products had differential risk portfolios, so it might grow quicker or slower depending, or even shrink, depending on that. So that's another interesting thing. And then there's also, I think the one case where you could have non-state providers is where you have matched savings. So in both the US, Africa, and Asia, foundations actually provide those matched savings that I talked about, 50 cents for every euro. So it doesn't have to only be the state, but those have to be charitable foundations willing to make that investment. So here's the questions I thought we would ask in the workshop. I don't know which ones, there's too many of them here, but you know, can civil society, government, or possibly microfinance institutions develop alternative policies around savings, including short-term and long-term savings? Should civil society seek to influence, partner with banks, credit unions, or other governments to deliver on those savings, or even on credit? I'll ignore that one. That's a bit complicated. Maybe I don't need to talk about that one. Yeah, I think interesting to think about self-employment in entrepreneurship, especially for migrants. Although we need to ensure social protection and rights. So one of the challenges with self-employment in the UK, at least, is you don't then get a pension, because most pensions in the UK are private through an employer, and most self-employed people do not set up a pension for themselves. So they may be making more money in their 30s and 40s, but by the time they hit 65, they don't have a pension. So unless they've been able to save enough money through those years, they often experience old age poverty or don't retire until they're 75, 80 years old. And I think this is a really key question. Are we reaching migrants and ethnic minorities? Or even are they being channeled into particular sectors? So one of the things we find in the UK with self-entrepreneurship is that about 2/3 of migrants are in catering, owning restaurants. So I don't think it's true that ethnic minorities just particularly like owning restaurants. They would like to do other kinds of business too. But typically that's the sort of space in the market for them. And there's even some evidence that business advisors, if a migrant comes in and says, I want to start, a financial services company, they'll say, well, what do you think about maybe starting a restaurant instead? So whether or not financial advisors and advice at that point is actually tapping into the full entrepreneurial talents of migrants in Europe. I think the other question here that's quite interesting is some cities have adopted policies in terms of things like bank accounts. So in Canada, there are cities that the national policy isn't really great on bank accounts, but some cities have decided to give bank accounts to everyone through things like post offices. So they're kind of state-supported institutions. And then the final question is what the bulk of my presentation was on, is can governments in Europe do more to show their investment in and commitment to the integration of migrants, for example, through asset building policies, through those things like child trust funds. Do you think that's something that's viable either at a nation-state level, i.e. in Estonia or Germany, or following Prodi, should we be thinking big about a European baby bond that will not just integrate kind of Europeans into a European identity, but also show to migrants that they are, in fact, part of our society, and we're not just asking them to integrate, but we ourselves are making an investment in them too. So that's my presentation on financial inclusion. Happy to address any of these challenges. I think we have half an hour. Do we?
45 minutes, I believe.
Oh, okay, 45 minutes.
12:45 is the beginning of lunch, so
Okay.
40 minutes, sorry.
Okay, that's fine. So I don't know if people want to ask me some questions first, and then we can either focus on 2 or 3 of these questions. Maybe, I was going to say split into groups, but I think we're few enough that we can have one discussion. Is that acceptable?
I have just one question.
Yeah.
I don't understand the acronym of EMB.
Yeah, it's just the ethnic minority we use. We use black and minority ethnic, and it's a UK term.
But when you do I don't know the source of the result. But when you do the statistic, you integrate by ethnic.
Yes, yeah. So we keep statistics on ethnicity in the UK, and that's the category we use, basically to talk about non-white groups. Yeah.
But those data are official from the state.
The Wealth and Assets Survey is run by ONS, the Office for National Statistics. But it's not. Yes.
So the official data, they disintegrate.
Yeah. Oh, yeah. So the census has kept data on ethnicity since 1991.
Okay.
So.
And this is
Yeah. I will be presenting some of this later this afternoon.
But how they identify the person is
Self-identification. Yeah. But there have been surveys that have looked at self-identity versus. It's fairly accurate. I think partly it's been since 1991. So we have people have been filling out these forms for 26 years. So they're used to the categories.
I have one question. In Estonia, it is so that just like in the UK, the low-income people have less savings. They are less financially, let's say, literate, and there has been a lot of talk regarding the financial literacy of people.
Yeah.
Also, whether it's discussed in the schools at all. And I wanted to know, what is the situation in the UK? Is there some special attention given to financial literacy, and are there such programs in school already initiated or not?
That's a good question. So there has been a demand to have financial literacy in schools for 15 years, and it comes and goes. It is an option to teach it, but it isn't taught. No, it's not required. I don't want to be too skeptical, but the evidence isn't great on financial education programs. So whether or not they actually improve people's choices. So I think there's also a question of what would you teach and how do you teach it? Because when researchers have evaluated financial education programs, they found minimal effect on people's behaviors. I think the thing is, one of the ways I tend to think about that is better off people make financial mistakes all the time. So we fail to pay our credit card bill on time, even though we have money in the bank. That's a mistake because you're paying unnecessary interest even though you have the money. Or you forget to make a payment on a utility. I mean, this is less common now with direct debits and transactions. So it's not so much that poor people have less literacy or education, it's that the consequences of making a mistake are more severe for them. So if they miss a payment, they don't have, they can't afford basically not to do it. But the second point is we need, I think, better evidence on what good financial education looks like before we fully roll it out. And I think that's been one of the other challenges. What I mean is the education that's been provided hasn't shown to have long-term effects on improving decision making. And I think the second point is because of a lot of financial decisions are choices about different products, there isn't always the right answer. because you're choosing between two different mortgage products. So that's always been a constraint on financial education. A lot of banks and financial institutions don't like financial education so much for that reason, because they are competing on products, and they don't want the state to say this kind of product is better than that kind of product. But basic money management, I think financial institutions are in favor of and would like to see taught better in schools. And whether or not we can teach it more interestingly, I think that might be one of the ways to do it, not just with calculators, but with, I don't know, balls and kind of, peaches and bananas and apples, so that young children at a very young age don't see money as mystifying and as purely about maths. I think that's the other challenge about a lot of it, is it's taught as maths, and if children think they're not good at maths or don't like maths, then they don't engage with money issues.
In Estonia, the problem is also that we have a very strong Soviet background where not many options for savings were possible at all, so people don't have that habit, they don't have that experience, and only the ones who are more wealthier have the habit. And some years back we had a big problem when the financial crisis arrived. People started taking very high interest rate short-term loans, the so-called SMS loans, and then the issue of actual financial literacy came into the public arena, that people don't actually understand what it means if your interest rate is 120, etc., etc., etc. So this issue started getting more voice as such, and there are some there is one rather known female teacher who is also kind of a face for the female investor, and she's also saying that the actual knowledge of kids of what is money, how you have to earn, and what it means to spend money on different things is rather low, and the school is not supporting. And when I'm talking about financial literacy, I don't even mean so much the special courses of that, but just integrating the everyday understanding that money is not a number and you just don't get it from the ATM, but that it's something more. So
I should have mentioned, this is the Money Advice Service. This was established by the government about 8 years ago. So this is attempting to get people to think more about the exact questions you've asked. I think the way credit and interest rates are presented is very misleading. I think people need to know the numbers, not just the percentage. I think the percentage number doesn't mean anything to anyone. 125, 25. People don't understand. What you need to explain is how much are they paying a month and how long will it take them to pay back. I think those are the things that are the most important issues. I think we've got a little bit too fixated personally on APR, especially for short-term loans, because the APR can look very high but can still be affordable. My criteria would be affordable and appropriate, so that the loan is appropriate to someone's circumstances. So if they want a short-term loan, that's fine, and it's affordable for them. And I think that those should be the criteria rather than some arbitrary percentage. I mean, I think by that qualification, 200% interest rates will never be appropriate or affordable for anyone, right? So I think it's fine, because we've had a debate in the UK about the interest rate cap. So we put a cap on how much low-income people can pay for credit, and it's worked a little bit, but debt is still very high. Personal debt is still very, very high, and it's a real challenge because people get into debt, and then those loans you're describing, then they go to illegal kind of loan sharks, and they pay even more, right? So they're paying them to repay, they're asking for money for them to repay a debt, and then they're getting into more and more and more debt. And this was a really big phenomenon. And I think things like Christmas spending, birthdays, those sorts of things need to be put into people's calendars, all of us. And as I said, I think we all overspend at some point in our lives, in some month. It's just some of us can afford to do that, and others can't. But I think this is a good example of, like, we have a little budget planner here. I think these sorts of things, but it gets quite complicated quite quickly, even though it's relatively simple,
Just for you to know that the two major Estonian banks also offer the same kind of thing, that they analyze your monthly how is it, outgoings or whatever,
Yeah.
just based on which sort of stores you visit, they just say that you spend this
Yeah.
much on food, this much on utilities, etc.
Yeah.
So it's I mean, I'm not really sure how many of the people who should be budgeting their
Yeah.
costs are actually looking at these, but for me it was rather interesting and rather illuminating on
Yeah.
how much I actually spend on some things or others.
Yeah.
So in that sense,
So it gets quite complicated, any budget, as you know, like once you get into the details.
but in actuality, I think that in that sense, Estonian banks are trying to get
Yeah.
knowledgeable clients. They are trying to help them finance their money
Yeah.
reasonably well, because I mean, a long-term client is always better than a client who's in debt and you have to send them to the
Yeah.
incasso or whatever you call it. So, and I guess that the Estonian banking system is also rather different from that of the UK, because in Estonia, I mean, everybody can have a bank account. I believe that foreigners who don't have long-term living permit, they have to, I believe it was 200 euros they have to pay for their bank account, but for all the rest, it's for free. And also the, how to say, not the majority, but the basic bank card you get is debit. So in order to have a credit card, everyone has to apply. It doesn't matter what sort. I mean, you don't get it just like that. And I think that a lot of people don't have credit cards just because of the principle that then I can't overspend. So
Yeah, you
I
have
don't
one-
run
I mean,
into debt accidentally.
As you know, in the UK, we have very high consumer debt, and credit cards are a high, a big reason for it. But I'd still be interested, I mean, I'm assuming that migrants still are challenging, it's more of a challenge for them to open a bank account. Is that you?
I just wanted to point out that it's a very interesting situation with the limited amount of refugees that we do have, or migrants that we
Yeah.
have at the moment. Well, especially the refugees, actually. It's the fact that we provide this sort of, we try to provide a very minimalistic sort of financial, what's the word?
Literacy.
Literacy
Yeah.
for them in certain courses. But the fact of the matter is that when we do that, it's always sort of like, I mean, I personally do that sometimes, and I just tell them it's really a mystery how Estonians do survive financially, because the fact of the matter is the salaries are extremely low. I mean, especially if you look at the general public in that sense. I mean, then you would have quite low salaries, and with everything becoming extremely expensive, if you look at rents and whatnot, then the only way these people survive is through some sort of social support that they already have because of the fact that they're Estonian, whether it's living with their parents, with their mother, 3 generations of a family member, of families living in smaller apartments or whatnot, and that's how they would hold together the cost of living, really. So when you try to explain to them that, okay, this is actually how much, I mean, looking at your background and your language skills and all that, you're probably going to make around 600, 700 euros at best. And the only way, and if you have kids, then, okay, now we have some sort of child support, or the depending on how many children you have, of course. But the idea is that it is, I'm not sure if I really got my point across, but here it is a bit, I mean, certain things are very simplistic or simplified when it comes to the bank account getting and things like that, but at the same time, some things are extremely complicated. And then because we struggle with our own financial literacy, it's very difficult to give them any good advice because people here are also struggling.
That rings a bell in terms of what sociologists call financialization. That everything is taken over by banks and financial products, basically. But she said, and my earlier experience, having done some research on financial literacy and some practical projects on it in Estonia, is that, and also what Miley said about our Soviet history and our sort of short-termism that comes from that. The future is insecure. We don't know what sort of currency we will have next decade. Our savings will be eliminated anyway.
So it doesn't make sense.
Yeah, this kind of fatalistic attitude, and there's so much of survival skills of everyday life that is outside the financial sector. Your long-term strategy is to buy forest or land or housing, or have many children, and or live with your parents, and all sorts of things that are perceived as legitimate. Securing your future, but they are outside of the banking system and the insurance and financial system, and outside of the official financial literacy strategy, which I've seen and worked with to some extent, but which is now in sort of a latent kind of half-dead state because of the state hasn't agreed who's responsible for it, and the person who was the enthusiast, she resigned.
I mean,
in Estonia there is one person for every project, so if she resigns then the whole strategy falls apart.
So sorry, was that meant to be for children or for adults as well, this financial literacy program?
It was meant to be all encompassing, but the main focus was on schools, of course. So, and another observation, of course, this is a much wider issue than ethnicity or integration. Definitely. This is across all groups in society. And another observation, what relates to these integration issues, we don't have a debate about migration in different ethnic groups in terms of assets. We have debates about labor market segregation and housing segregation. In our recent Human Development Report, there were chapters on it. And of course, loads and loads about cultural and language integration. But what about assets?
That's why
Statistics Board probably collects that data, but it's probably somewhere in registers, yes, but there's no debate about it.
The one sometimes space, I know you want to talk, is remittances. So you sometimes hear people talk about housing that people may hold in Morocco because of a grandmother or something. But the evidence and the data on that is even worse, obviously, because you don't know, and also whether or not they will actually be able to sell that asset, bring the money to the UK, or even are not declaring that asset because it will prevent them from welfare entitlements in the UK if they show that they own property in Morocco, for example. But I agree. I mean, I also want to say on financialization, I think one of the challenges is a lot of these products are, a lot of financial inclusion literature, I think, focuses too much on financialization. And I do object, personally, I think it's a problem. And I think even the savings literature, and even Shared, it's about providing, to me, to individuals, poor individuals, what the state ought to be providing. So a lot of the micro-saving schemes in Africa are so that families can afford education or healthcare. I think in Europe, we've rightly decided that paying for basic education and paying for basic healthcare are not things that we agree with. But I think because we've thought like that, we haven't thought enough about the other aspects of savings and assets, that even if you provide health and education and maybe some other services through the state, that doesn't eliminate the role for savings, right? And I think thinking about it more creatively, and especially with assets, and because it has that, I think, integrative possibilities, but also the sort of longer term, I think the state should get more involved. And I'm they don't have to be big schemes. That's the other point I should have said. It's not necessarily about how much money only. It's about the fact that people can save a little bit. But the second thing I want to say was in response to your question. I mean, I don't think also that financial inclusion is a solution for too little income. So I think there's another question, which is, do people's incomes match their expenditure? And that's almost a prior question. And in some ways, I would discourage savings for people.
They can't save.
Where yes, where
that they have to sort of fill out. And if they're like looking at, okay, if this is how much I'm going to be making, but my rent will be this, and these are all of my expenditures, then at the end of it, they're in minus.
I agree. I mean, if the choice is giving enough food to the child or saving, then you'd be crazy as a policymaker, as a human being, to be advising that they must put away €5 this month, because it's very, very important. But we do find that even in the poorest countries in the world, if you put that kind of target, so in some of these countries they literally have that target, just save $3 every month, and they're doing it. And I think that kind of thing can hopefully change attitudes. But I don't think it's I'm not arguing that financial inclusion is a full solution, in particular to poverty. Sorry, but she wanted to talk first. Yeah.
Yeah, no, you kind of summed it up by
Yeah.
your responses, but having received my own higher education in the UK,
Yeah.
I was perplexed on how much of the, let's say, support services that in Estonia are carried out by the state
Yeah.
are carried out by private entities, and that require a lot of economic input.
Yes.
So for me, the idea of having actually a child scheme, when you encourage people to have children on which you have to spend in the future tremendous amounts of money, for example, for higher education, although you have student loans, but still you have very big percentage of population in huge minuses on their bank accounts and loans, then we can argue whether they will have to ever pay them back or not. That's another question. So for me, that doesn't seem like a sustainable model.
No,
So I was a bit surprised by,
Sure.
by that, because having lived in the UK,
Sure.
it's basically you have to spend on anything in which in Estonia, apart from NHS, on which you would not have to spend
Yeah.
here. Let's say, for example, higher education.
Yeah, and that's why I said I think different European countries, I mean, in general, the European tendency is more in the direction of Estonia, as we know. And I think that's a good thing, especially for health and education. But as I said, I don't think it exhausts the questions of money management. It doesn't exhaust the question of should people be developing short and long-term savings, even if it's not to pay for health and education. You still want people to have short and long-term savings. And I think it's actually was rational under the Soviet period, given that the currency might, be sort of decreased through inflation or whatever, not to save, because it's kind of irrational to save lots of money if the money is then going to be depreciated through inflation or whatever. Did you, and then you?
Yes, I just wanted to say that if we imagine the lower middle class and people living on the verge of poverty, then they really do not have the opportunity to save. But at the same time, when we're talking about a typical middle class family or young people especially, then very often they say that my salary is so low, I don't have any options to save any money. But then it comes or boils down to bad financial choices, whether or not you actually have to get a new iPhone, whether or not you actually have to have so many subscriptions of different magazines, or whether you have to have your cafe latte from we don't have Starbucks, we have Circle K every morning. So all these small sums add up.
Yeah.
So in some instances also it's the result of bad choices and uninformed choices. And now I'm really not talking about the people who are living on the verge of actual poverty and have the difficulty of making both ends meet. But there's also a kind of
Well, this is consumption culture as well.
Exactly, exactly.
there's
And a lot of people don't really think about it. It seems that everything they buy is a necessity, but in reality you have rather less necessities. Coffee is not one of them.
That's
but
a
also-
huge debate. What is a
Yeah.
need? I'm a sociologist of consumption.
I know, yeah.
That makes me burn in the sense that there are definitions of normality.
Yeah,
and
of
it's,
course.
yes, of course, it's a choice whether I buy this
Yeah.
latte or not. But it's a sense of being a normal
Absolutely.
human being.
Status as well.
And not only being up there.
Yeah, no, I mean
just being,
dignity, yeah.
Normal.
Yeah, I
regular.
understand, but I'm a financially rather literate person, and I'm very practical. So I'm just saying, if you cannot afford that coffee, and if you're saying that you can't really buy that, and I'm like,
Yeah, but
I
that's,
understand what you mean, but
but
there's
in
lots of
Estonia-
social behind that.
I understand what you're saying as well, but in Estonia, lots of people, and most people, can't afford that and won't even buy. I mean, this is kind of more for the generation that has traveled and who would think of actually buying a latte from, I don't know, wherever. But the regular Estonian,
Yeah.
if you have kids and or you're a single parent or whatever, that's really not an option. And you'll take your lunch with you to work and things like that. It's not, regardless. So.
Yeah, the class I was talking about is more like this young professional,
Yeah,
25 maybe living.
But
on
that's a
their own.
minority in Estonia.
Yeah, that's true, but they are the ones who are probably, whose voices are, I can't say that the best heard, but they tend to whine about how difficult their life is without understanding that there are a lot of people whose life is even more difficult. But the other people are just so busy getting by that they don't have the opportunity to speak out.
Well, also, as I said earlier, I think they can afford to make what you might call a financial mistake.
Yeah.
Because they
They can
still,
afford it still,
they can
exactly.
still afford getting into debt, credit card debt, because they are living with their parent, or they have other, yeah, I mean, in the UK, we have a survey that asks the general population, what do you think is a necessity? And it's interesting to see because it changes. So in 1 year, before the financial crisis, a holiday went into the basket for the first time in 2005 or 6. Every family it's called the minimum income standard, MIS. So the view was that a basic decent life in Britain required the ability to have one overseas holiday a year. But that was 2005, 6, 7. In 2008, 9, 10, the respondents took it out because I think in response to the fact that there was pressure and social attitudes changed as to whether this was a necessity or not. And TVs came in, and now it's a widescreen TVs. I think even most people consider a necessity. A mobile phone is in the basket. And they're not asking 25-year-olds, they're asking the whole of society, what do you think? So it's quite, but I think it confirms both your points, that this is a difficult question, but also that it can change quite a lot depending on financial circumstances. Yeah, sorry.
I have a question regarding microcredits.
Yeah.
Do you have any successful stories of business that started from microcredit? Because I'm from Iowa, and
Okay.
we
Yeah.
provide reintegration support to people that go back to their own country. So, like with a very little amount,
Yeah.
they can start a business in there. Like I don't know, being even like buying a cow or frying thing.
Yeah.
So, do you have any examples?
I mean, you probably know Kiva is the most famous kind of one. So I've given to Kiva. You give them. I've given $25, and it just keeps recycling. You can choose to get it back, but you just keep getting it. So you're lending money to people, in the world, and you can sort of search it. Bill Clinton likes it, and Kofi
Well, then
Annan.
we
Well,
should
they have like Bill Gates and Bill Clinton, Kofi Annan have all said it's great. I'm trying to remember, they've changed the website since I've used it. But yeah, they've given. So they'll have examples of successful loans where people have built. I think the challenge is in thinking about this, as I said, in the West, because microcredit is different. 1,000 euros isn't very much
Exactly.
to start a business in the West. Even in Estonia, I know you have, lower income than the UK, but what banks consider a small loan in the UK is 10 or even 50,000 pounds, which is way outside the scope of what migrant entrepreneurs are looking at. I think the challenge, as I said, there's two challenges. One is that they tend to be funneled then into certain bits of the economy, so catering, transport, but also small businesses that service their community. So like a Nigerian shop that sells Nigerian products. And the problem there is scale. You can't, there's two problems. One is the customers are actually quite poor themselves. So the income and expenditure is quite volatile, so it's quite hard. And secondly, scale, how do you grow that business? And mainstream credit still doesn't see you as a thing. And I think for microfinance, I have a friend who runs a microfinance-ish kind of thing in the UK called Fair Finance. And for Faisal, so he worked for the UN in Bangladesh, and he was like, well, if we can do this in Bangladesh, why can't we do this in Britain? So these are small loans of under 10,000 pounds. Some of them, like the personal ones, are under 1,000 pounds. But the thing is, what you actually want them to do is graduate to mainstream credit, right? You don't actually want them so there's a little bit of a tension in the business model, which is over time, he figures out which are the successful clients who won't default on their loans, who can successfully build up. So he kind of wants them as repeat customers. But on the other hand, he's offering them smaller amounts at a higher margin than what Barclays can offer. So there's a kind of tension there in terms of how you use microfinance to scale up and to build. But there's plenty of examples in the developing world. I think in the West, in Europe, it's a little bit more challenging. And I think the reality is, even Faisal has said this to me, some people applying for business loans are actually using it to pay off personal debt, but they have a business that they are running, that they do need the money, but the reality is the immediate cash that they require isn't always to invest directly in the business.
So how to monitor this?
It's very hard. He's quite good. He has a lot of monitoring. They do like this kind of. He's very transparent about how he loans. You know, he discloses his data. He's like a big advocate for data disclosure. We're trying to get the banks. We've been trying to get the banks for 15 years to disclose who they lend to, who they reject, how much they give, etc., etc. But Faisal can. They say it's too costly. Faisal's operation is like £1 million a year. And he can do it, and their operations are billions, and they say that they can't. You know, it's incredible. But anyway, yeah, I think there is scope for this. I just think you have to be careful about. As I said, the other view I have on self-employment and migrants is that it was interesting. I was in Croatia talking to this conference on migrant entrepreneurialism, and the room was filled with public civil servants. So none of them were self-employed. Zero. There was one self-employed person at this conference of 100 people. And they were all saying that self-employment is the solution. And I was looking at them, and I said this to them. If you think self-employment is such a good option, why aren't you all doing it? Why do you have civil service jobs with guaranteed pensions and job security? And why do we see in Britain that all of the first generation of Indian shopkeepers, what did they want their kids to do? Lawyers, doctors, civil servants. They don't want their children to inherit. So I think the other thing is we should not romanticize the form of migrant self-entrepreneurship, which is very, very low margin, very long hours, and very volatile. They're selling milk, which they're getting maybe 2 cents of a profit on. You have to sell a lot of milk to make that work, right? Even if you're putting 50 cents profit on it, you have to sell a lot of it given the rent and where you have your shop. So the economics of running a corner shop is not great.
You are giving only examples of small business.
Yeah.
For example, in Portugal, and probably.
No, there's. I don't want to be. I'm not.
Yes, I know. But answering to our colleague from IOM, we use the figure of the microcredit for small business, of course. But they are coming from banks, but also from foundations. They support small business. And I came from the High Commission for Migration, and we have some programs to help migrants inclusively on the entrepreneurship. And at this moment, we have migrants that they run business that are successful in terms of tourism, local local pensions, I don't know on the word, and also they provide consultancy. So we have good examples of, and they start with using the microfinance. So we have.
No, I agree. They do exist. What I was saying though is when they're successful, they then move out of micro. That's probably a good thing.
I just microcredit. The reason of the microcredit is only to support small business. And if they want to scale up, they have to
go elsewhere. Yeah, no, I agree. And there are cases across Europe of migrants who started very small and scaled up. I mean, I know there's a man who he's a restaurateur, and he started with small kind of, and now he owns Roast Restaurant, which is in London Bridge, and he's very successful. But even he experienced the phenomenon of banks not wanting to lend to him because he had successfully run 2 Indian restaurants. But then he wanted to open a British pub-type restaurant, and the bank was not certain that this was a good idea, even though he was already a millionaire at that time and successfully ran 2 Indian restaurants, because the idea was just because you know how to run an Indian restaurant, well, you know how to run, a sort of more typically British place called Roast. And now he's done that's a very successful restaurant. He's opened another one. There are kind of stereotypes about what kinds of business migrants can do, but also realities of what kinds of business they can do because of credit. So I do think it's an opportunity. I don't want to undermine self-employment. I think it's a great opportunity. I just think we have to be realistic also that some of the reason people fall into self-employment is not chosen as
Yes,
well.
of course, but it's better being
Self-employed than unemployed. Yeah, that's true too. But we have data, like you were asking about the ethnicity data. So it used to be that black groups in Britain were more likely to be self-employed, but it's now no longer the case, and it's because it's migrants actually generally. So there's not like ethnic groups are not more likely to be self-employed. It's migration, which is understandable, except for Bangladeshis and Pakistanis, who even in the British born generation are more likely to be self-employed. But I don't want to be heard to be criticizing self-employment.
But it makes complete sense though, because so many of the people who come here.
It's entrepreneurial to leave, right? That's the first thought that people
They're
have.
like, we'll open a restaurant. I
Yeah.
can cook, or
Yeah.
and it's sort of like, well, that's great and it's wonderful, but I mean, it's a business that you're gonna have to
Exactly.
run, and you're gonna have to pay taxes, and you're gonna, do you know how to do what? And another thing here in Estonia, opening a restaurant is not like opening in London. I mean, we're talking about a city with 400,000 people, and if half of them don't even eat at restaurants because they take their lunch to work with them, then it's
Yes.
profit is not.
Well, that's the other thing. We have evidence on this, how many businesses fold every year, and it's something like 7%. But in the catering, it's 15%. So not only are we pushing them into a particular sector, we're pushing them into a sector that has high failure rates.
But even with that being said, I personally know
Yeah.
like 2 families who are doing a pretty good job
Yeah,
now with this catering business. So, I mean, but it's a bit,
I just think that often policymakers are too focused only on this as the solution. That's my objection. I do not disagree. It's just I've been to so many conferences where the proposed solution to migrant labor market kind of inequalities is let's boost, and it's always in even what they call migrant neighborhoods. So I was in this one in France, and they were basically, in my view, kind of limiting minorities to only servicing minorities, and it was a very, I felt, closed-minded view about what the opportunities are even for self-employment. And I just don't think everyone like you is entrepreneurial anyway. But the one thing I would say is migrants are more entrepreneurial. They are not the random person from their country of origin.
Yeah, exactly.
They've chosen to move, to
Yeah.
get up,
Yeah.
to make a financial risk as well as an emotional and kind of family loss. And so they're not the average person. So you would anticipate migrants they are, if not financially, kind of in terms of sensibility, more open
that's
and
true.
moving and entrepreneurial. It is an entrepreneurial decision to leave, already. So I think it makes some sense from a policy point of view. It's just we need also these other policies that I've suggested, and I hope I've given you at least some stimulation to think about asset building. Obviously, you need to make the political argument, but one of the points I was trying to highlight is if you make it universal for all babies born, for example, it will benefit Estonians.
It is, by the way, here. It
Yeah.
is. I mean, for all anybody in Estonia who has a child basically gets some. I mean, depending on how long they've maybe lived.
That's
And
child. Is that
If
child
they have
benefit?
the permanent, if they have the right to be in Estonia, they automatically start getting all the benefits.
Yeah, but that's my point. I mean, the people who come
Yeah.
with the relocation program, they have the right to be in Estonia, and the people who are not, I don't know, somewhere in Harku or Vau in that sense, then they also have the right to be here. They've already gotten their living permit.
Yeah, so those are usually benefits though, like
And
child
they
benefit.
get everything. They get
Yeah.
everything that a regular
Sure.
Estonian
I'm
would get.
saying on top of that,
On
we should
top of
develop
it.
the savings scheme. Yeah, so I don't just, so that's the other thing. I'm not advocating getting rid of child benefit and using the money to fund a different scheme.
Yeah.
I'm saying this is, because I think those are income measures.
Yeah,
You know,
that's right.
those
Mhm.
are sort of income support almost,
Yeah, that
which
is
are
exactly.
necessary for the additional cost of having a child. And I would be in favor of, you know, more maternity and paternity policies. So these are, to me, additional, once, I think those policies need to be in place, and I think migrants need to have them. But those are kind of, to me, basic social welfare measures that are not about financial inclusion. I'm happy to have that debate, although it's 2 minutes to lunch, but I think what I was trying to say is even once you've resolved those problems or you've dealt with them or implemented them, you still have the question of longer term savings that I think can be an integration policy. But I think child benefit can be integration too, because you're giving it to everyone. If
And
people are,
migrants tend to have more children.
yeah, yeah. Well, partly because of age as well. So migrants tend to be in their 20s. So once you control for age, in the UK anyway, the migrant differential is not that high. It's it's slightly higher, but it's not, yeah.
But just what I wanted to say, that when it comes to Estonia, we're saying that we should develop some sort of schemes that would be also connected to the banks, that the banks would offer certain services which are financed by the state. I would be very skeptical, because Estonia had the transformation to the so-called second pillar of the pension pillar, and the compulsory pillar, the funds that we have, they are not doing their best. They are lagging behind in the European sense. Their growth percentages are quite low, and the rate that every bank demands for the management of that fund
Yeah.
is rather high, especially if we compare it to the actual growth of the fund. So I would be rather skeptical, because so far the people themselves have, I think, like 1% or 2% of their wages, plus the government also 2 or 4, depending on which scheme you chose. So anyway, the volume of these funds is huge, and it's guaranteed income for the bank. So I'm not really sure how much the actual person will benefit from that, because
They're not
it's not even
making any
comparable
effort.
to inflation, but the one who is benefiting for sure is the bank, or are the banks. So in that sense, I would be very, very skeptical of trying
Sure.
to do some of those.
So that's
schemes.
then maybe why the state has to guarantee, like a state pension, a certain amount of
Yes,
return.
yeah, well, we do have that too. It's the first pillar.
very low.
Yeah, yeah.
And it's going to be even lower.
Thank you.
I give a very
Okay.
interesting workshop.
Yeah.
So very interesting. It was.
Yeah, thank you.
Thanks.
Yeah, thanks.